Good afternoon. Hope everybody's having a great day. Today was a beautiful day on the stock market. It was a bit confusing because it's Tuesday technically, but it's only the first day of the week, and 7 of the last 8 weeks have been turnaround Tuesdays where the market closes on the complete opposite side of where it opens. The only time that it was not was Juneteenth, when the market opened down and stayed down. And today I wasn't sure if it was going to be turnaround Tuesday or if we were going to hold it off till the second day of the week, but it turned around beautifully. The day trading positions that I posted on the chat were impressive. The best one, of course, was Roblox, but AAL did fantastic. The story of the day to me was energy. Energy as a sector was down over 4%. So when CPI gets read on our next reading, you should see it was the major contributor to inflation. And now that energy has plummeted, it's fallen off the face of the earth. We might get a better CPI reading when it gets read again. Google was up 4.5%. Amazon was up 3.6%. Tesla struggled at the beginning, and it took a little longer to take off. But when it started moving, it moved. Apple was up 1.89. Walmart was one of the few safety stocks that was up for the day, but it's because all of retail was. Home Depot was up, Lowe's was up, Walmart was up, Costco was up, Target was up. It was a good day overall. Energy got destroyed. Utilities got destroyed. Materials died. Industrials were bad. And healthcare, those are the sectors that have been up for the year. Those are taking a leg back. And the technologies, those are the sectors that outperformed for the day. Now, for the S&P 500, I do have to warn you, we are at that critical level. I have been saying that the S&P 500 needs to get to 400 before July 15th. If it doesn't get to 400 before July 15th, we are going to struggle. And let me show you one of the reasons why I say that. First, we are in a peculiar position because we're still under the 20-day moving average, which has now gravitated down to about 385. So keep a lookout for that shaded area there at that 385 area. I think that we will see some resistance there. I do expect the month to be bullish. And you could see right there the first 2 weeks of July for the NASDAQ tend to have a lot of bullish days on there. And not just a little bit bullish, 74.5, that's a lot of bullish. We consider it bullish when the probability is 60 or more. And we have 1, 2, 3, 4, 5, 6, 7, 8 days in the first half of the month that have a 60% probability of being up days. That's a very bullish percentage for the NASDAQ. It's not the same for the S&P 500, again, because typically it does get dragged down with other sectors that do not outperform the first 2 weeks of the month. So keep that in mind. We are expecting some bullish action all the way up until about July 15th. Not to say that we're going to go straight up on those days. As you could see today, the NASDAQ was up, but the SPY barely finished green. It's not necessarily a coincidence, as I just showed you. Historically, the NASDAQ does outperform these weeks of July. The areas to watch out for are 385 for the SPY. If we break 385, the next area of resistance is going to be 390, and then after that, we're looking at the 400. The lower risk range for the SPY is 376, which is what we've been using, that 376 as support throughout the week. And if we break below 376, of course, you have that gap fill down here at 365, and then a new low of year. Keep an eye out for those areas. As you've been seeing Louis on the chat, if we get to that resistance level, he buys a put. If he gets to the support level, he buys a call. And he has been killing it as a trader, just simply playing the support and resistance lines. Keep an eye on those numbers that I call out because they do play out. The NASDAQ, even though I did say that we're supposed to be bullish until the 15th, I want you to look at this. We are at the 20-day moving average for the NASDAQ. Not only are we at the 20-day moving average for the NASDAQ, we're at the very top of this downtrending channel. So if the Qs break 289, I'm going to say 290, then technically we're breaking the downtrending channel. I still wouldn't get bullish on it. I think in an ideal situation, what will happen is we'll break over it, come down to test it as support, bounce around here for a little bit, and then continue to go up. Now the analogy that I gave on the chat earlier today is if you look at the monthly or the weekly chart for the SPY and you see this drop of 2020 and you see this V-shaped recovery, well, just imagine building your house on that kind of foundation. If you build your house on that kind of foundation, the odds are it's going to do what it's doing right now and topple over. And you could see we're almost back to those levels where we broke out, where we were before COVID. So what we want to see is a solid foundation where we go down, go up, retest it as a low, go up, retest it as a low, go up. If we do that a few times, maybe come back all the way down to retest a low right there, that would be a solid foundation. That type of foundation will give us sustainable gains. This kind of foundation over here is just asking to get toppled over. So always keep that in mind. I do have some individual stocks to show you that have that kind of foundation. I posted this one earlier today, American Airlines. You could see that it has a higher low. You could see where the neckline is, and it's sitting right now. The 20-day moving average is right at the neckline, and if it closes above that neckline, then you don't have, the only other expectations that you have is for it to close the gap at 1470. After that, break of the downtrending channel. So that's the kind of foundation you want to look at. The one that I talked about 2 weeks ago or last week was Roblox, where it has the low right there, and then it has a higher low right there, and then it has the higher low right there, and then I drew that neckline right there, and it kept playing with that neckline, and then once it broke that neckline today, it just exploded, up 14% for the day. Beautiful day on Roblox. If you were holding Roblox, you did well today. You did well. I bought 1,000 shares at open, sold calls at 38. When it hit 38, I am very happy with Roblox. The 20 crossed over the 50. It has a higher low. Everything on here tells me that there is not another stop till about the 50 area. That's the next area that I would consider a support area or a resistance area. That's a good $10 more before I start getting concerned. The IWM, the Russell, it hasn't quite hit the 20-day moving average, and because it hasn't hit the 20-day moving average, I still think we have room to go on the small caps. The areas that you have to look out for on the IWM is 173.89 at the 20-day. If we do break above that, 179 would be the 50-day moving average, and in order to break above the downtrending channel, we have to get over 183. The areas below we have to look at is the gap fill at 164, and below that a new low of year under 163. And if we do start seeing that new low of year, then likely what we're going to do is fill this gap, long gap at around the 160 area. I think this area around 160 would be the most reasonable area that I think we'd go down if we make a new low of year. But I do see that same trend that I was talking about, where you have a low there, and then you have a higher low, and now we're starting to move up. That is what you want to see before you start placing your longer plays. I still would try to exit positions before we reach the top of this downtrending channel. And if we break above the downtrending channel and stay above the downtrending channel, then I would consider going long. You do hear a lot of talk about recessions on the news, and you hear a lot of talk about recession with people on the chat. So there's something that I do want to clarify on recessions. Recessions are declared by Enber, not by the government, and they base these on data that is released by the government. The data is released quarterly, so 2 consecutive negative GDPs will tell us that we're in a recession. If the following quarter is a negative GDP, then they'll say that the recession started, and they'll give you the date where it started. Likely, if we have 2 consecutive negative quarters, they're going to say that the recession started in January, kind of like they did over here in 1980. As you can see here, the recession in June of 1980, they said that the recession started in January of 1980. Well, they didn't say that the recession ended in June of 1980. They didn't declare that until 1981. In 1981, they said the recession ended in June of 1980. In other words, they didn't even declare the recession until the recession was over. In 1980, the 81-82 recession, it started in July of 1981. They declared a recession in January of 1982, and it ended in July of 1982. So when they declare recessions, it doesn't mean that the market's going to go down. Not necessarily. In 1982, it did continue to go down, but that was seasonally correct. In 1980, when they declared the recession, you could see the market had already started going up by the time they declared the recession, and it continued to go up after they declared a recession. So don't get hung up on recession being declared, and don't just start buying puts because you think recession is going to be declared. Play daily what you see. Don't assume, don't guess. Play daily what you see, because the market in its current conditions will change on a daily basis. Pay attention more to your support lines and your resistance lines. Pay attention to your bases. Play those support lines and resistance lines more than what you're assuming is going to be declared a recession. We don't know that it's going to be declared, and we don't know how the market will react if it gets declared. So don't put your money on that. Play the support lines, play the resistance lines. Don't be afraid to play the downside as much as you play the upside. TQQQ and SQQQ. Play the inverses. Buy puts every once in a while. But don't buy them and hold them long term in an assumption of what you think the market's going to do. Play what you see, not what you think. Have a great day, guys, and we will see you on the Haikhuu Discord.